Good morning, everybody. This is Dee Dee with Power of Three Trading. Thanks for joining. I'm not here just to teach you to strat, but to teach you how to profit from the market using the strat techniques. If you have any more questions regarding the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Rob in the Back Black on Twitter, or at sepiagroup.com. Okay. So yesterday, we talked about it being day the first day of our 2 and 3 day flip, right? We saw our little doji here. You've been following me for a bit. You know that when I see little dojis, they set up potential reversal patterns. And we talked about if price takes this 3-day high, we look for price to continue along, but that really didn't happen till the end of the day, guys. So we're going to talk about a couple trades and how we got into them and what it looks like. So today, well, we'll talk about today in just a minute, but I just wanted to show you, we went two down, right, on this 3-day. I like the 3-day rule, guys. I like that 3-day rule. You don't always know what price action, I mean, we don't from day to day. We don't know what price action is going to look like. But when we saw this big gap down and then we had this inside 2 down and then price go inside, I mean, look at that range. It came up quite a bit. So in my thoughts, I was preparing for that reversal. We didn't get it, right? And the next day, and it tried it again. So we'll look at that. And then finally broke up on that 3-day flip. So I'm always aware of when we have our 3-day flip, day 1 or even day 3 of that 3-day flip. It doesn't matter. All right, so here was IWM. Again, you saw this doji on that 3-day move, gapper down, then it went inside, and then our 2-3-day flip here. So inside and up. So we should have been preparing for those move to the upside. And SPY. Again, 2 down, 2 down, 2 down, right? Thinking about the strat techniques, you had this gapper, 2 down, 2 down, 2 down. Price is going to hit some exhaustion and give us a 2 up. It doesn't matter what time frame, ladies and gents. It does not matter. Every time frame will get you a reversal, okay? And so even if you didn't know how to draw broadening formations, if you miss this move here, this gapper, you had an inside bar at the top of this range, gap down, 2 down, gap down, 2 down, 2 down. You miss this guy, just wait for it. Price trades 2 back up to the upside. Maybe it gives you an opportunity to get in. And so let's take a look at what that looked like on our 45-minute chart. And then I'm going to change the time frame so I can show you where I caught using my 9. I think I mentioned, I don't know if I was on recording, but I think I mentioned to my live group here that I was going to start looking at the 9-minute. I'm going to show you what that looks like. All right, but I want to talk about these 45. So when we decided as a group that, you know, we're going to start using the average daily range versus the broad informations, just because it's so difficult. I really didn't have the time to teach broad informations with all the things I got going on. So I reintroduced the average daily range. I'm pretty sure in my Benzinga video, I talked about this a couple of years ago. Still holds true. So we brought it back. And so what we're looking for is reversals off the ADR, the high and low of the ADR. So short off the high ADR, long off the low ADR. But when price trades above its ADR with some momentum, we're just looking to see if how that momentum is going to carry, right? And you saw that with a couple, especially with the chip stocks, right? But let's talk about, I'm going to talk briefly about, and then we'll go down to a shorter time frame. When price hit the high ADR, on SPY, IWM, and the Qs, it reversed. Then it traded in this tight range. And then, like I said, you didn't see that move really above that three-day until the last half hour of the trading day. When we look for reversals, right? I don't look for necessarily reversals off of a shorter time frame, because a lot of times that's TTOing. And so Rob will say, the reversal is on the 60, right? We look for those reversals off the 60 because the 60 is like a new day. I prefer to use the 90-minute. And so we introduce the 45, which is half of 90. And it gives you a pretty good idea of what that 90-minute flip is going to look like. But what's important, and I don't think I mentioned this before, but I wanted to bring it up because there's a difference between a shooter like you have here, right? This is a shooter on this 45-minute IWM versus this 3-2 on this 45-minute range here on NVIDIA. So when we talk about reversal patterns, I'm looking for shooters at the top of a range, hammers at a bottom of a range. And so what I like to see on that first 90 flip, because remember, we're talking, think about it, the longer you go through the day, the tighter those ranges get, right? So the best opportunity to catch that reversal, if there is one, is on that first 90-minute flip, right? So if you miss that open, the best opportunity to catch a reversal is off that first 90-minute flip. Does not necessarily mean it's going to reverse the day and go outside, right? We don't know that. But think about what we're looking for, though. It's hard to see it here, but you can see the top of this 45 is right there, that opening 45. The next 45 minutes, it comes back inside that opening 45. Here, not so much on the SPY, right? On the Qs. And it did not do it on SMH. So when I'm looking for my reversal, remember, this is the 90 flip here. This is the 90 flip. The reason we like shooters is because we have a better opportunity, a greater probability that this is going to continue lower. And we'll show you what this looks like on a shorter time frame. When price comes back inside that opening range. So in this case, 45, because this is where we're looking at our signal. So anytime you're looking for reversals on your time frames, if you don't have an inside bar, because an inside bar can be a reversal or a continuation, right? So it could go 2 up, inside, 2 up. That's a continuation versus a 2 up, inside, 2 down, right? That'd be a reversal. And so, or you can get this mess where it's outside and you don't know what's going on. But anyway, so this was a better opportunity for a reversal. Why? Because it came back inside that opening range. So I want you to take note of that, write that down, look at your charts, the time frames that you're trading. And when you're looking to trade reversals, look for price to close or trade back inside, preferably a close back inside that previous range. So whether it's a 15-minute, a 30-minute, 60-minute, when you're looking to trade reversals, we like shooters and we like price to trade a close inside that previous range. So then you take that reversal 2 down, all right? Better opportunity. It kind of worked here, even though it didn't take the close inside this opening range here, but you can see a reversal here off this 2-bar. You can see it here on the Qs. Obviously, you don't see it here on the 45 on the SMH or the NVIDIA, because it's stuck inside this second 45. This second 45 was pretty strong. And you can also see the opening 45 was pretty strong. Yeah, big 3 here. And so for me to short this, guys, this would have had to close below this 2 up candle here. And that's what you see on the others, right? They close below that 2 up candle. NVIDIA had a long way to go because its close was way up here, guys. So it would have had a long distance just to get to the low of this second 45 candle. So just food for thought, keep that in mind. You can see here, it worked on Microsoft as well. This is that open 45, it went 2 up, closed in here, you can take that 2 down, right? So you preferably, you want a shooter on those reversals, right? Small body candle, 2 down versus long body candle, and then trying to take a 2 down because it's got a longer range to go in that next flip. All right, hope that helped. All right, so now look at, so let me show you the 9-minute, because this is where I had my charts yesterday. And so I had said to the group, I was gonna start looking at the 9-minute, looking for 2-2s, inside bars off the 9 to try to catch these moves, because sometimes being on a shorter time frame, there's so much activity in that first 15, 18 minutes, it's hard to really see which way the market is going. Zooming out helps, right? Gives you a lot more clarity. And so instead of 3 candles like I was using on the 6, now I'm using 2 candles. Signals don't change, right? It's still a 2-2 or an inside bar. It's a 2-2 or an inside bar, right? And so we had beautiful setups here on SPY, IWM. Actually, Qs went outside, so I didn't trade that. And then we had a winner here in NVIDIA. And so I wanted to talk about this specifically because it was not an inside bar, but I want you guys to think about when you see those 2-2s and thinking, reversal. Not so much. Now, of course, I keep up the SMH, and SMH is going higher. So I'm not looking to short this. And also keep in mind, guys, this was your open way down here, way down here. And if you're looking at the broader market, and in this case, because I trade the chips, I also have the SMH up. So if you're looking at the broader market and you're looking at the SMH and it's going higher, you have to say to yourself, probably not going lower, right? But you also have to be patient because this is a big range here. This is a big range. And so you're saying, okay, 2 up, 2 down, not necessarily. And so these TTOs exist, 2 up, 2 down, 2 back up. This was the trade right here, guys. This was the trade right here. And it went up and up and up and up. And you didn't get your reversal until that 90-minute flip, which was here. Well, you got a reversal here on a 9, but your 45-minute, 90-minute flip came here. Okay, so we exited. When you start seeing the market topping out, it starts creating these inside bars or even an outside bar. That means there's some indecision, right? You see market starts to trend back down, likely topping out here. And then you had the last 9 minutes in that 90-minute candle. Remember, you had already gone outside on this, outside 90. Okay, so The 9 minute worked really well. You can see where we had some opportunities off of an inside bar, inside bar, inside bar. And so what we're going to focus on, so I'm going to wrap that because I want to start focusing on, we had a really good discussion after we ended our recording yesterday on our entries, because we're not drawing broad informations, and we're going to focus on these entries and the flips, right? So you decide if your flip is going to be a 15-minute flip, or 30-minute flip, or 45-minute flip, or 60 or 90, that sort of thing. But we're going to spend a little time on that this morning on record. And we talked a little bit about that yesterday. Tesla did its split yesterday. Didn't trade that well. And you can see it was below its average daily range, traded up, traded down, traded up, traded down. There's a dip. Let me say this before we move on. Ladies and gents, this is what we don't want to see. Tesla, this type of trade in Tesla is what we don't want to see as a day trade. The NVIDIAs, the IWMs, Qs, this is what we do want to see. Rob will say, we like long green and red candles. So depending on your colors, it can be black and white, whatever color you use. But the idea here is, what's the next two? The next two, the next two. The market has to continue going in a direction, whether it's up or down, for us to profit. Tesla is stuck inside the opening 18 minutes. Let me flip that over so you can see what I'm saying. This is not what we want. If you get an outside bar like here, and price goes inside and stays inside, these are not the trades you want. These are battles. This is a battleground you're fighting here. And so you see the inside bar, you say, I'm going to go 2 up. It's crossing back over. Well, you can take that trade. It's below your ADR. Maybe it trades to that ADR, and maybe it doesn't. In this case, it did not, and it traded back down. But it's inside this opening range. It's inside. So these are the battlegrounds that, I'd like to try to avoid. And then it trades down, and guess what? Back up, down a little bit, holds, back up. I mean, it's just a battle. And the longer you go through the day, the harder it is to make money, especially as you get towards the latter part of the week, if you're trading options because of theta. All of that has to come into play when you're trying to manage risk. I'm not saying don't take these trades, but you absolutely have to be prepared to reduce risk, because you're battling out. Market may not be moving, volume may be a little light, and so you don't have the volatility. Options probably won't move as much. Okay, so you have to be thinking about that when you decide how much risk you want to put on. But once you get into the battleground, right, and stocks start trading inside your 60, your 45, your 90, and this is what we talk about. This becomes battleground territory. And quite frankly, it's just stressful to me. All right, so we're going to talk about this. We're going to go to the shorter time frame, and we're going to throw on this 9 minute here, and we're just going to leave up the 45. We're going to do 9 and 45. I'm going to remove my lines here. We're going to go 9 and 45, and we're going to talk about entries. All right, this is how we're going to spend the next few minutes, because it's Friday and we got Fed speak. So think about your flips, right? Are you going to do a 60 flip? Are you going to do a 90 flip? Are you going to do a 30 flip or 45 flip? I like the 45 flips. Okay. I was doing it with the 18, so you can do the 18 and the 15, right? You can do a 15 flip, you can do an 18 flip. But think about that though. How much time do you have to trade? Ask yourself that first. If your time frame, let's say you work a full-time job and you don't have the time to just kind of sit and monitor the computer all day, then you may want to zoom out and say, okay, well, I'll just wait for a 60 flip, and on the hour, I'll just look to see if there's an opportunity to catch a reversal, because those are going to be our best trades, guys. We don't the continuation trades put us in some low, especially if you go out to longer time frames. They're going to put you at some level of exhaustion, and the likelihood of you getting triangled out increases throughout the day. So at the open, right? At the open, if you're trading the open, whether it's the 1 minute, the 3 minute, the 5 minute, the 6 minute, the 10 minute, whatever time frame you're using, the signal is still the same as it is if you're trading later in the day. So you're waiting for an inside candle or a 2-2. So when you decide, so remember, this is the open, right? So the 60 minutes is like, what I will say is like a new day. This is the first 60 minutes of your trading day. All right, could even be the first half hour, because in today's market, at the half hour flip, things start to reverse on you. So you have to be careful with that. Okay, so the open, we're going to call it the first 60 minutes, right? The first hour of trading. So where we're looking to maximize or to get profit. If price is trading like we saw in Tesla, right? This in the first 60 minutes, and here's that flip will be right in here. There was nothing. This was a mess. This is not what we want to do. These are not the trades we want to be in. We want price to go 2 up, 2 up, 2 up, 2 up continuously, 2 down, 2 down, 2 down, 2 down continuously. Had a big outside bar, went 3, 2 down, and now you're inside this range. That's not the trade we want. All right, so let's go back to NVIDIA. It went 2 down, so you have your opportunity here. Do you go 2 down, 2 up? My preferences, this is how I use CCI, guys. I want CCI to be, especially on the lower time frames, because this is the lower time frames give you the greatest volatility, if you will, of the CCI swings, right? The movement of the CCI is more sensitive to the shorter time frames. And so if you're trying to take this move with CCI still in the red zone here on this 2 down, 2 up, it's probably not quite ready to explode. We want to see this in the buy zone. You see that in this candle on this 2 down, 2 up. And then you get your move to above 100, right? And that continues here on the 45. All right, so let's look at it again. You have we're on the 9 here, and we can look at it on the 6 if you like. We're at 2 down, 2 up. Fewer candles here, guys, versus the 3 to 6, right? That's why I said the smaller time frame you're on, the more volatility. And in my opinion, that's why I had to leave the 3. The more difficult you have in trying to gauge market. So this would be the same scenario on the 6. Hasn't gotten into the buy zone yet until it crosses back over here at 10 o'clock. This is at the 9:57 mark, but same difference, right? Where are you going to take your signal? I like it. I'm going to move it back over here to the 45. All right. So 45, 5 9-minute candles, guys. 5 9-minute candles. 45-minute flip. So remember, 45-minute flip. This is what we're talking about here. So opening, what's our signal? 2 2. 2 down, 2 up. Still in the sell zone. 2 down. Does not create a new low here. Broader market, so we looked at that already. Broader market is going higher. Wait for it. 2 down, 2 up. This becomes now your entry at the high of this 2 down candle. This open in range, so the candle in which you opened I'm sorry, the opening, the candle that that triggered your entry, the opening of that candle that triggered your entry becomes now my stop. Guys, other folks may have a different view on that, but here's my take. Like this went 2 up and came back in, this could go 2 up and come back in. You could have a 2 up that then reverses. We don't know. That's the mystery of this market. If we knew the answer, we'd all be very wealthy. So what we do is we minimize our risk, right? When price goes above 100, you have an opportunity to maximize your risk, right? Because you're feeling pretty good about the move. Price gets stuck in this range, not so good. I'm a one contract kind of girl, just to see if I can get something, right? Don't know. Like in here, I didn't trade in here. I didn't, after the open, I didn't trade. So like in here though, price gets stuck, not above 100. That's when I start to minimize risk. So here is your entry. Here, the opening of this 9-minute candle becomes now my stop loss. Now, if you're trading options, obviously you don't know what that is. I don't enter it in the system. I just look, right? I'm monitoring this trade. It trades back below 171.03. I'm going to go ahead and take my loss on that. First loss is always the cheapest, because I don't know if price is going to go 2 up and come back in and go 2 back down in that next candle. It's just not worth the risk. Opportunity to get back in, you'll see it. You can drill down to a 3-minute chart for that. Okay. And so let's just look at what that did here. So you can see here was our entry, right? So we're taking it off this high at 948. Right, which is also your 18-minute flip. So we're taking it off this high. So if you were looking at the 18, price traded down first, right? This is your 18-minute flip. It traded down. So if you were on this 3-minute, trying to catch this move here, you got triangled out. That's why I said sometimes it's okay, guys, to zoom out. You would have gotten triangled out. Then we would have taken this entry right here. And this, because this was the candle, 957, right? You with me? 957. This is the candle where we would have taken our entry and our and then you can see it came down to 171.57, gave us 30 cents before, didn't come all the way down. So 30 cents above our stop loss. And remember, I'm in a mental stop loss because I'm trading the option on this. And then it continues to trade higher. Okay. Now let's look at another time. I'm sorry, later in the day to contrast what that looks like. Again, 45-minute. All right. Next 45 minutes is here, guys. So this is a continuation. So you're still good here. You're still good. Remember, you entered way down here. 18-minute flip right here. You got your signal 2-2. You entered here. 45-minute flip is at 10:15. It comes in a little bit. CCI looks to be good and pointing straight up on the 45. Hold. It starts to round out. Last 9 minutes in your 90-minute candle, right? Remember, your big outside day here now. Okay, your big outside day. It's come back, it traded up close. So at that point, it had not traded, but it's close to this range. What's that low? 177.70, 178. Yeah, so it's trading into this range. Exhaustion, it will happen, and you have to be aware of that. We're not drawing those broad informations, but I sure am looking at it. So here you can just draw a line, vertical line, a horizontal line here, because you're inside this low. Remember, if once you start trading, it takes out the highs of these levels. Now you're looking at the lows of the previous ranges. It's coming back inside these previous ranges. This is that range. Draw that horizontal line. What's it doing? It traded up. It goes inside, guys. Take this profit. Take this profit. You see this trade back in, comes back below this range. You're taking profit. With me? Okay, so now next 45 flip is here. You see price coming down, but this is where we were talking about the reversal. Is there, this one, I'm sorry, right here. Is there a reversal? This is your 45 flip here. You're inside 45, but guess what? If you were going to take this trade, your entry would have been here. That's prior to the 45 flip. I don't like taking those, and I'll tell you why. This is nice and green. We don't know if this is a TTO that's going to trade 2 down and then 2 back up. So I'm going to avoid this guy. Now I wait for my 45 flip, and I'm asking myself, is price going to go? Because you got to go 2 down on these 45s. Remember, the signal is 2 up, 2 down, or inside bar. This, you had a signal on the 9, but your 45 flip, I mean, your 45 was still bright green. The next flip, though, you're inside this 45, not the best trade. Then you have your next flip. You have this 2 up, 2 down, your inside bar. Price looks like it, and this is also your 90. Oh, no, that was first is your 90. So this is the second 45 in that flip. You're still inside this range, guys. I don't particularly care for these trades. Do you have a signal on the 9 minute? You do. Remember, this is, so let me say this again, because this is important. 45 flip, bright green, opens, goes 2 up, CCI still good. 45 flip, remember, we're waiting for our 45 flips. 45 flip. So when you got your signal here, CCI was still green. I'm sorry, NVIDIA 45 was still green. Next 45 flip, it turns red, but your entry is way down here because you're looking for your signal at the 45 flip. You're looking for your signal at the 90 flip. You're looking for your signal at the 60 flip. So you didn't have a reversal here, guys. This was a 2-2 continuation. Entering here could be risky. 45 flip, here, you already missed this move. You're probably at some exhaustion, or this market can go lower, but you're still inside this range. We don't know. So we don't want to trade inside that 45. 45 flip. There's an opportunity here. I probably wouldn't have traded, but guys, you have a signal. Let's contrast these. This 45 flip at 11 o'clock, you didn't have a signal. You had already missed the move. You had already missed a move. This is already 2 down, 2 down. This 45 flip happens right here. You have an opportunity to get in on this trade right here. And then again, you're still inside 45, but you're going to use that 9 because there's not a signal here. But the signal is here. I hope I made that clear. This 45, you didn't have a signal on the 9, and you're inside 45. This 45 flip, you're still inside 45, but you have a signal on the 9. There's the difference. You can take that trade and see if you can get price action to move lower. Now, it would be the same. I'm going to remove these lines. It's going to be the same. you will enter here, right? Because this is your signal, 2 up, 2 down. Not here, because you've already missed this move. You wait for your next 45 flip. Do you have a signal? On the 9, I do. Inside, I'm sorry, 2 up, 2 down. This becomes your entry, guys, ladies and gents, and this becomes your stop loss. The candle you entered on. You entered here. This becomes your stop loss. You trade this down. When you get that 2 against you, you got to get out. Why? Because that's another signal. That's another signal. So even if you didn't have broadening formations, you don't have CCI, you're just trading pure strat, this 2 up is another signal. That's a reversal on the 9-minute. Oh, and by the way, here's your next 45-minute flip. So we're exiting here. All right, so we're going to exit that position. You see the small body candle, price goes 2 up on you. You got to get out of that trade. You make a small profit. Wait for it, next 45-minute flip. I'm going to remove these lines so we can see it. All right, 45-minute flip. And that's what I mean, guys. You may not have you all day to sit and wait for price action. But if you zoom out and wait for your flips, whether it's a 60, 30, 60, 90, 45, look for entries. Here's your 45-minute flip. Do you have an entry, a signal on this 45-minute flip? Remember, you're still inside. All of this is taking place inside this open and 90-minute range. I mean, it's just crazy. So you're still inside. Do you have a signal? You do not. You had one here, but this is where we're exiting because we entered here. We exited here. Your next 45-minute flip happens here. Do you have a 2 down, 2 up? Nope, we missed it. That entry was here. Wait for it. Inside bar. Now we're not going to take this 2 down. Look at your CCI. Looks like it wants to trend higher. This is your open on the 45. All right, so this is your open. So you're green here. CCI trend looks like it wants to go higher. It's in the buy zone. It's still above 100. So you want to be careful. Do you have a signal? You do. You do. You have an inside bar. What are our signals? 2-2 inside bars. You have an inside bar here. This actually creates an outside bar, trades up. You can take this because CCI, I'm sorry, 45 is green. It's trading inside, right? But you're at your 1230 flip, which is also your 60 flip, which is also your 90 flip. And you can see CCI is still trending higher on the 90. We're looking to go higher, right? Again, that's why I'm probably not trading these short in here, but I'm just showing you opportunities because it's every flip. It's every flip. And so if you're looking, zooming out because you don't have time to sit at your desk and monitor every 15 minutes, zoom out. You enter this trade off of that inside bar. This now becomes your stop loss. So you have a signal here on this off this 45-minute flip. You have an inside bar. You take the high of that, the opening candle that triggered your entry, that candle that triggered your entry. You put your stop loss at that open. In a way, it goes, you hold, you hold, you hold, you get hold, I'm sorry, you get an outside bar here, tricky, right? Remember, you're inside. You may be taking, exiting that position. If it 2 goes against you, it continues, go 2 up, 2 up, 2 up, 2 up. Then you get this red candle, CCI comes back down. So this would have been tricky to hold, but you're inside. So you have to understand there is likely some TTO and going on the, I'm sorry, in here on the shorter time frame. And then you get your 45-minute flip. right? I'm going to delete this line. Next flip, you have an insight 45. This is an actionable signal. You take the high of that 45, and if you're taking the high of the 45 using this 45-minute as your signal, your stop loss then becomes the opening of this 45-minute candle. So whatever time frame you're using to you're getting your actionable signal, that's also the time frame you're using for your stop loss. So if you're taking your signal on the longer time frames, you want to use your that same longer time frame, so in this case a 45-minute, for your stop loss. Why? Because you're likely going to get triangled out, but you've chosen this longer time frame for your signal. So you got to keep that in mind when you're trading. If you're looking forward at these longer time frames with these tight stops, 45 minutes is a long time, right? So you're going to use that open. Maybe it stops you out, maybe it doesn't. I don't know. 177.15. It hit 177.15. So I'd be looking at that and saying, okay, what's price action doing? What's CCI doing? Because again, guys, the market maker sees your orders. They see your orders. And so if I'm trading the common and I put my stop loss right in there, penny, come on. Yeah, they're going to come down there and take it. So just know that this is what I would be looking for. I may give myself a little leeway just because I've been doing it for a while and I'm looking at my CCI and I'm like, yeah, it went 2 up. It'd have to go all the way down. Maybe it does, maybe it doesn't. And so I'm looking at this and saying, let's just see. And I know me, I would flip over to the 3-minute, say what's happening over here. And you can see that little outside bar. Because I'm telling you guys, you will get TTO'd. You will get TTO'd. That's there. And look at CCI, it's well below 0, which is probably why you went inside here. We're going way over here though. Okay, yeah. So you take that entry. That's 115. So it's 115 is the flip. All right, so you're going to take that entry here and you get your TTO right here on that 3-minute. 1, 2 down, 2 up rev strat. It will happen. It will happen. And so I'm looking at this and I'm like, that's not so bad. CCI isn't brushing up against 0. Maybe you give it a little room. But that's the idea, guys. That's the idea. You have to know what's happening around your trades to determine whether or not you want to hold, and then you manage your risk. You manage your risk through position sizing. So you're not freaking out when that market starts to trend back down, because it could come all the way back down to this open like it did here, only to take off. And then of course you get your reversal near the this would be actually the last 18 minutes in that 90-minute candle. You get that reversal. All right. So I hope this was good. I'm going to wrap it up there, but just keep in mind that if you're going to, regardless of time frames, right? So you don't have to use the time frames that I'm using. But if you zoom out, you have fewer candles that you're dealing with. And for me, I'm all, when I see all of that movement on the shorter time frames, it's just too fast. I don't have clarity. So that's why I, look at longer time frames. I know a lot of guys don't, but 90-45 is a great time frame, but so is 30-60. All right. So you can make it work. The signals don't change. It's 2 down, 2 up, or it's inside candle. It's either 2-2 or it's an inside candle. And then you're going to enter off the highs of those 2 candles or inside bars, and then you're going to set your stop loss at that open of that bar that triggered your trade. And And we're just going to avoid getting stuck inside these ranges. You know, I showed you this 45, but I don't usually trade this. But I just wanted you to see is that every flip, which is why if you're looking at a shorter time frame, you're probably going to get more triangles. But if it at every flip, whether it's the 30, the 60, the 45, or the 90, you're looking for your signals, right? If you've already missed the move because it triggered early before your flip, wait for it, and then look for then look for an entry. Okay. This is where the patients come in and trade in the strat. It can be done, but you have to have the mental discipline in the patients, because we do not know from moment to moment which direction this market is going to go. But we put the odds on our side when we wait for our signal. We use our CCI to help us gauge momentum of a trade. All right. So we're going to wrap it there with my fave script, Proverbs 21:5, the plans of the diligent lead surely to advantage, but those who are hasty come surely to poverty. I don't know about you guys, but this world is in chaos right now. We got so much going on. The last thing I can afford to do is lose, money trying to trade. And so you should not put yourself in that position. If you haven't gotten comfort around what you're seeing in your candle patterns, don't invest real money. Continue to paper trade, continue to learn, try to set your discipline as you're monitoring your stocks. But jumping in and out, guys, it's going to be a difficult you're going to have a difficult time, to say the least. All right, so 90 minutes, set your alarms. What I do is 9 minutes before the next flip, I have my alarm set. Okay, I'm paying attention. Is there something that I can trade? What's the market looking like? Should I get in or now, or do I wait for the next flip? I don't have a signal, wait for the next flip. All right, I'm going to wrap it, guys. Thanks so much for joining. Hope this is beneficial. Take good care, everybody.